Good afternoon, everyone. I'm Keith Mclean Talbot, President-elect of the Real Estate Institute of BC and your MC for this event. I'd like to begin by acknowledging that we are on the traditional unceded territories in British Columbia of the many First Nations and Métis whose footsteps have marked these lands. Namely, I am on the unceded territory of the Coast Salish peoples, including the territories of the Musqueam, Squamish, Stolo, and Tsleil-Waututh nations. You can tweet all the great things that you hear during this event at hashtag REIBC President's Luncheon or at _REIBC. The Real Estate Institute of BC is a leading professional real estate association with over 800 members across British Columbia and Canada. Established in 1962, the REIBC plays a unique role as the only professional organization whose members come from every segment of the real estate community, including residential and commercial realtors, property and strata managers, leasing agents, appraisers and assessors, notaries and lawyers, land agents and government employees, among others. Our mission is to promote our diverse RI designated members as distinguished real estate professionals that are trusted, educated, and experienced. REIBC offers the recognized RI designation to real estate professionals from all sectors of the industry who meet high educational and experience standards. The RI designation provides an assurance of excellence for clients and consumers. RIs are designated, educated, experienced, and connected. I would now like to introduce you to our president, Susan Antonielli.
It is my pleasure as the president of the Real Estate Institute to welcome you here today to the annual President's Luncheon. Each year we strive for excellence to bring you a guest speaker that will update you on the happenings in the real estate world. Today we're very pleased to bring you an international panel of speakers which Keith will introduce shortly. We re-evaluated our strategic plan this year and noted that our strategic direction will once again be one that will be focusing on the way to continue membership services, albeit in a different way. Our mission statement is to promote our diverse RI designated members as distinguished real estate professionals and that are trusted, educated, and experienced. With the mission statement in mind, the Institute embarked on a new project this year entitled REIBC Pro Series. We're very excited about this series and we have tapped our members and asked them to talk about their professional, what they did, how they achieved success in their career. It's an exciting and excellent series. Here's a look.
So the great thing now is, as I reflect on my 37 years in my professional career, I can sort of hopefully impart a few of the things that I learned along the way.
I'm going to share a little bit of knowledge
about leadership.
How I've got established as an architect.
Hopefully give you an outline of how the real estate industry in British Columbia has been formed.
And some of the lessons and adventures I've had along the way.
If I could speak to my younger self, I would have some advice for new agents coming into the marketplace today.
You really have to get good at listening and observing body language.
My name's Michael Heaney. I'm an RI.
My name is Connie Fair.
I'm Daniel John.
I'm Judy White, and welcome to the Pro Series.
It's interesting though, getting to cash flow is not just buying a building. I learned that the hard way.
Thank you. We will continue to curate more topics and expertise and we'll keep you informed as new classes are added. We are very pleased to have compiled a number of these and today they will be available to our members at no charge and a nominal fee for non-members. Check out our website for Pro Series.
Thank you, Susan. Under normal circumstances, this is the time we would introduce you to a long list of members who've supported and contributed to the Institute in different capacities. As we are on a different format, hopefully for only 1 year, I will introduce to you our current Board of Governors and the past presidents. We say a heartfelt thank you to the honorary members and Award of Excellence recipients for their contribution to the Real Estate Institute of BC. The Real Estate Institute of BC Board of Governors, we have President Susan Antonielli from the North Fraser District, President-elect, myself, Keith Mclean Talbot from the Vancouver District. Secretary-Treasurer, Cindy Nesselbeck from Vancouver Island District. Past President, Daniel John. Umesh Shan from the Fraser Valley District. Sean McGuinness from the Kootenay District. Mona Murray from the Thompson Okanagan District. Jeff Radke from the Northwest Prince Rupert Caribou District. Clayton Olson, Edwin Yan, and Rob Green from the Vancouver District. And finally, in Vancouver Island District, we have John Burby. The past presidents who are with us today are Troy Abramitis, Graham Allen, Peter Brethington, John Eastwood, Andrea Fletcher, Jason Grant, Andre Gravel, Mandy Hansen, Charles Johnstone, Ian McNaughton, Peter Remington, Kevin Ross, Gregory Steves, Scott Ulrich, Judy White, and Nathan Warbitz. As we are in a different time and we are not able to have lunch together today, we did send along dessert for you to enjoy while listening to the speakers. We trust you received your 2020 President's Luncheon gift and dessert. To quote Albert Einstein, "In the midst of every crisis lies great opportunity." And with this pandemic, we use the opportunity to bring you a luncheon we would not be able to do otherwise. We went out to contacts in other areas of the world and asked them 3 simple questions. How was your market pre-COVID? What is your market during COVID? And how do you see things in 2021? We are pleased today to be able to offer this program to you. Speaking today are real estate professionals from Melbourne, Australia, Mazatlan, Mexico, and Sydney, Australia. Firstly, we have Beric Wilson from Melbourne, Australia. Beric is a founding partner of the Corda Mentha Real Estate and has nearly 30 years experience in commercial and residential property industry. With a background in property valuation and corporate finance, Beric has worked on some of Australia's largest and most complex insolvency and corporate restructuring engagements and is regularly called upon by financiers, corporations, and government to provide advisory, strategy, and transaction management services in high-stakes situations. Beric is also the founder and chairman of the Chain Reaction Challenge Foundation, a not-for-profit organization that has raised $29.9 million for children in need since 2007 by challenging senior executives to ride, get this, a 1,000-week-long course. Impressive.
Well, good afternoon, everybody, and thank you for inviting me to be part of your lunch today. I'm Beric Wilson. I'm based in Melbourne, Australia, and I run the real estate group of Corda Mentha, which is a company that grew out of Arthur Andersen back in 2002. I was last in Vancouver back in 2017, and Brenda was kind enough to invite me along to a dinner that you had after one of your golf days. And I thoroughly enjoyed meeting a number of you and discussing how the various real estate markets were working and operating both there in Canada and here in Australia, the other side of the world. Well, clearly a lot has happened since 2017 and Brenda has asked me today to perhaps bring you a little bit of an insight into how the Melbourne market is currently operating and how we're coping with COVID-19, and to give you perhaps a little bit of insight into what's happening currently and also how we think things might unfold into 2021. Each of the states in Australia handled COVID-19 differently. And Melbourne, which is in the state of Victoria, in the southernmost part of Australia, we felt as though we had handled it pretty well in the first instance. Went into lockdowns in March, and by May, numbers were very low, and we felt as though we had effectively beaten COVID-19 at that point, and restrictions were starting to lift. However, by the middle of June, numbers were rising again, and it became evident that we had had some issues with our hotel quarantine situation, and numbers were starting to rise quite rapidly. By July, the numbers were really getting high, and at that point we were back in stage 3 restrictions, and there was some serious concern for the second wave that was coming for Melbourne. By the first week of August, we went into stage 4 lockdowns, which were really quite severe, and from what I can tell, perhaps some of the strictest lockdown and isolations that we've seen across the world. To give you some insight into what that was like, we were put into a curfew where nobody was allowed to leave their homes between the hours of 8 p.m. and 5 a.m. Only one person was allowed to leave home per day for the purposes of shopping. Businesses were quite significantly impacted in that most businesses were shut, retail businesses were shut, and construction was reduced down to just 25% of capacity on large sites. So it's had a very significant impact on business. The residential markets, real estate agents were no longer able to operate because they couldn't do open for inspections, and auctions were not permitted. And from a personal perspective, we're still working at home now, and people were only allowed to leave their homes for the purposes of exercise for 1 hour a day. And you're not allowed to go further than 5 kilometres from home for any reason unless you have a permit. So those sort of restrictions have really put Melbourne into a very severe lockdown as compared to perhaps Sydney, which is in New South Wales, or Brisbane in Queensland, which are operating far more normally at this point. The number of COVID cases across Australia is at or about 27,000. Around 21,000 of those have come from Victoria. So you can see why the restrictions, particularly here in Melbourne. The challenge, however, has been, we've been in stage 4 lockdown for 100 days, or just over 100 days now. And we are getting control of the numbers, and I'm pleased to say that last weekend we got an announcement that we were starting to look at restrictions again being eased. We're now allowed to go up to 25 kilometres from home, and the restrictions on time on exercise, for example, have now been removed. And the next phase is for business to start to reopen again. So I guess the challenge then is to turning to the business world and what that looks like. I think the mantra for the state government has really been about fixing the health-related crisis first, and then looking at the economic crisis. So if we look at the various real estate markets across Australia, and particularly here in Melbourne, firstly turning to the residential markets, the traditional residential housing market has held up actually quite well, considering the lockdowns that we've had, but it's probably too early to tell exactly where we're going, because there's been a very limited amount of supply come to the market at this point. So perhaps the most challenging part for the residential market at the moment is the new apartment market here in Melbourne. We've had significant demand for new apartments, predominantly from offshore purchasers and/or local investors renting to new migrants. And so we've seen a steady supply of new apartments here in Melbourne and quite a solid demand. However, perhaps the most challenging part from COVID at this point for Melbourne and perhaps for Australia overall is the stalled overseas migration. Our borders have been closed as a result of COVID, and we're expecting that to have quite a significant impact on net migration. When we look back over the last 3 decades, 88 to 99, we saw migration of around about 81,000. 99 to 2009, we saw migration of 163,000, so double that the previous decade. And in the years 09 to 19, we saw migration of 216,000. So we can see that the Australian residential market has been quite heavily impacted by new migration. And so stalled migration is going to be an interesting challenge for us to deal with. So I guess one of the biggest challenges for Melbourne and for Australia generally in terms of the housing market is how quickly our borders reopen and how quickly we get back to reasonable numbers of net migration. I think Treasury here in Australia advised that in the year 2019/2020, we had around about 232,000 migrants come to Australia, and they're forecasting that for next year, that number will drop to 31,000. So I expect that the new residential market could come under quite a bit of pressure, particularly around settlement risk for large apartment developments that have been sold to offshore purchasers or those sold to investors where currently the demand for renters at this point has really dropped away quite significantly, particularly in those locations that are more dense, like the CBD locations and CBD fringe locations, which are located very close to our major universities, because a significant amount of the net migration to Melbourne is driven by our education sector. So then moving on to other areas of the real estate market here in Melbourne, when we look at the retail market in Melbourne but across Australia, retail has really been under pressure now for a decade. So it's not really a COVID issue, although COVID-19 has really accelerated the changes that we're seeing in the retail markets. We're working with a significant amount of retailers across the country at the moment on their network planning and trying to adjust to digital transformation that is happening in the retail sector. And I think the clear trend there is that you no longer need stores just for distribution. You need stores to connect your brand with your customers, but you also need to invest in digital capabilities, your online platform, and your fulfillment capability to round out your entire offering in the retail sector. Obviously, that's not a one-size-fits-all. Various retailers will adjust and use bricks and mortar real estate more or less. And I don't believe it's a bricks and mortar versus online argument. I just think it's an argument of shopping and providing consumers the best available so that they can shop whenever, wherever, however they want without the pain points. And to do that, you'll need, or retailers will need, a network of stores, good digital capability and excellent fulfillment capability along the way. So what that means though, I think here in Australia and probably across the world, is that retailers no longer need as many stores as they've perhaps used previously. There are alternative sales channels available to them now. And so some retail real estate will become functionally obsolete and need to be repositioned for alternative uses. We're already seeing that here in Australia, I think some of our shopping centres are now shrinking to greatness so that they provide non-discretionary retail, predominantly around food and service, with a range of additional specialty stores, but nowhere near as many specialty stores as they perhaps once had. Development opportunities on those sites have included residential, retirement or aged care, and there is some debate at the moment around office as well, as perhaps we decentralise our working environment. So when we look at the office environment, that's a heavily debated area at the moment as to whether or not COVID-19 is going to change the way we work and therefore change our use of office space. There are a number of debates at the moment around the potential for decentralisation, because I think there's a lot of discussion about people not wanting to catch public transport into the CBD at this point. And therefore, I expect that we'll probably see a number of hub and spoke type opportunities pop up as suburban office locations gain some momentum. Having said that, I think there's a long way to go on this, and while you're in the eye of the storm, it seems as though everything is going to change. But my personal feeling is that we'll probably just move more towards a greater degree of flexibility, but not necessarily entirely away from working in the office, because there are a lot of great advantages of being together in an office type environment. Having said that, for Melbourne, our CBD location, we've had a lot of supply planned and currently under construction, due for completion in 2022-2023. And so we're probably in quite a vulnerable position at this point. Many of those new build office buildings are pre-leased. And so they're probably going to be okay, but it's the backfill space that I'm more concerned about, and particularly B and C grade type office buildings that require quite a bit of CapEx, leasing incentives, fit out costs, etc. And for many of the owners of these properties, which are typically syndicates, unlisted property funds or privates, they may not have the appetite or the money to be able to continue to spend on those type of assets. So I'm actually expecting to see a bit of pain in those markets, depending on what the financiers do as well, and whether or not the financiers are prepared to support a number of those landlords. So as a bit of a wrap up, Melbourne is really operating quite differently from Sydney or Brisbane or the rest of the country. We've effectively been in hibernation now since July, and a very strict hibernation since August. So I think the markets are untested moving forward from here. But there is a level of optimism now that we've seen that we feel we've beaten the second wave, which I think is probably the first of the major capital cities around the world to have faced a second wave and then brought the numbers back down to less than 10 a day. So that's really positive from our perspective, and I'm confident that we'll move forward from this with the market starting to thaw out. There is a lot of pent-up demand, and I think I have some cautious optimism for what 2021 holds for Melbourne. So that's it from me. I hope you have a fantastic lunch, and once again, thanks for inviting me along to give you a bit of a perspective as to what's been happening down here in Melbourne, Australia. Bye for now.
Cheryl Gamble from Mazatlan, Mexico. Cheryl is a well-known realtor in Mazatlan, Mexico, and real estate is her passion. She is an International Real Estate Award winner for 5 consecutive years and is a full-time resident of Mazatlan for 36 years. Cheryl is uniquely qualified to introduce you to the market at Mazatlan with a very distinct tricultural perspective, as she has lived and worked in the United States, Canada, and Mexico. Her reputation is to provide the best customer service possible by always putting her clients first, and that means staying on top of what is happening in the market. She is bilingual, tenacious, and energetic, and has a vast network of contacts in the local community.
Everybody, I'm Cheryl Gamble, and I'm here in the beautiful city of Mazatlan, Mexico, on the beach, on the Pacific Ocean at Diego's Beach Club. I've been asked to give you an explanation on the situation in the market that we have right now. So the market before was about 50% nationals, 50% Americans and Canadians. And with COVID, we thought that might change, but it hasn't. We are doing really well. We're doing a lot of virtual tours, 360 tours, FaceTime tours with Canadians and Americans. And we're selling a lot of properties to them, probably because people want to be where they want to be. And who wouldn't want to be in the beautiful beach with the warm weather and the warm people? So I'm going to explain to you the market before. The prices haven't gone up, but what has happened is we're finding that properties that are on the beach that were $250,000 and below just do not exist now. I mean, sure, we can find one, but it's hard and it's difficult. So what has happened is the prices haven't gone up, but what has happened is that the inventory has gone down. So if you want a beachfront condo, we speak in US dollars, excuse me for that, but it's around $250 US dollars and up. You can have a beautiful 2-bedroom, 2-bathroom beachfront condo. We also have properties in our Central Historical, which is, we're the colonial city by the sea. So what that means is that we have a beautiful Central Historical, and those homes, we found that those prices have gone up a little bit because the inventory has gone down. So now I'm going to explain to you what you can, the procedure to buy, because sometimes that's a little confusing because Mexico has laws that protects its borders. And it's 50 kilometers from the beach and 100 kilometers from the borders. So what that means is we can buy a property here on the beach or here in the city. This is for all beach resorts in Mexico. But what we have to have is a fideicomiso or a bank trust. And what that does, it's a 50-year trust that's automatically renewable after 50 years, and what the biggest advantage of it is that it's checked really well. Your property is checked really well with a notario, which is a notary who went to school to be a lawyer, who ended up going back to school to become a notario. All real estate transactions in Mexico have to be done through a notario. So what we do is, because we need a bank trust, is that he coordinates with the bank trust companies, and they do they check to see if there's liens, that everything is paid up to date, like property taxes, electricity, etc., etc. And then we can close and we can sign the deeds. Okay, so that's really important. If something should happen to you, you have beneficiaries in your bank trust. The beneficiaries, you can have as many as you want. You can give each one a different percentage. But if something should happen to you, it's really easy because it's not like it does not have to go through probate. What happens is they have a postilled or legalized death certificate, and then it goes to your beneficiaries. So that's an incredible plus for us foreigners. You could probably find here in Mazatlan, you can find that the cost of living is a lot lower than the United States and Canada. You can hire a maid for like $10 a day to clean your house. The water, garbage, and sewage is like $5 a month. Electricity is our biggest expense, and maybe you'd pay about $50 a month. So in all, for about $100 US or $130 Canadian, you can maintain your home, which is very, very important because your retirement dollars go a long ways. By the way, Forbes magazine said that we were the second best place in the world to retire. So with that being said, you could find your property. I highly suggest that you find a good realtor with a good reputation, and it always helps if you have a brand name behind you. Brand names in Mazatlan are, you can Google it and you can find like Keller Williams. It's known worldwide. There are a few other ones, but yeah, it's really easy, and it's affordable here, and the people are so nice. Mazatlan, throughout Mexico, people are really nice, but here in Mazatlan, we're famous for our wonderful people. They open their hearts and their homes to us. They help us. They show us their culture. They welcome us. They like us. So it's a huge advantage, and most of Mexico is like that, but I find I've traveled throughout the country. I've lived here full-time for almost 37 years, and the Mexican people everywhere are wonderful, but Mazatlan has a special magic. We also have the longest Malecon or boardwalk in the world. Well, some people say it's the second, but most say it's the longest in the world. We have the third largest carnival in the world. We have the lighthouse, which is over there, is the tallest freestanding lighthouse in the world. We're the shrimp capital of the world, and we have lots of tequila. We're only 30 minutes from, well, depending on which way you take, 15 to 30 minutes from the airport. We have international flights to the United States and Canada. We're only 1,100 miles from the border of Arizona driving by car. We have great medical facilities here and medical care, and yeah, so the market is super good right now. Why? Because we have it all. We have it all, and you know, especially with the colder months up north, people want to be able to sit out here in their huaraches and their shorts and have a beverage and enjoy the city and the people. So the market is really good. We do have properties that start at about 100,000 US, 130,000 Canadian. But I would say if you want to be on the beach, it's going to be 250,000 and up. Okay? So thank you for your time, and if you have any questions, please feel free to contact me, even if it's about real estate or not. I've been here, like I said, almost 37 years. I have a great network, and hopefully we see you soon. Salute.
Mark Litwin in Sydney, Australia. An economist by trade, Mark has 15 years of commercial real estate experience in multiple international markets and provides reliable access to development companies that have comfort developing projects of scale. With a particular focus on transport-oriented growth corridors and emerging markets, Mark works for the public and private sectors, positioning residential, commercial, and hotel development sites throughout metropolitan Sydney. Mark traveled regularly to APAC financial centers of Hong Kong, Singapore, and Kuala Lumpur to introduce opportunities directly to offshore investors and has a proven track record delivering results through this network, pre- and post-COVID lockdown. Most recently, Mark has been instructed by the Commonwealth of Australia to represent the first upcoming land release within the new $5.6 billion Western Sydney Airport, due for delivery in 2026. Mark is a past governor with the Real Estate Institute of BC, and we thank all three of them for being here.
Hey, good afternoon, everyone. Merry Christmas from Down Under. My name's Mark, dialing in from Sydney, Australia this year. Hope everyone back home is doing well in light of the second wave. Really feeling for everyone back home, particularly as we come into our 35-degree day for summertime over the Christmas holiday period. Big shout out to Brenda Southam for bringing this event online this year. Brenda, well done in light of the circumstances, and very flattered to be invited to have a bit of a chat and share some of our experiences about what we're seeing in Australia in this sort of COVID-related marketplace. So my name's Mark Litwin. I used to work on Vancouver Island and a bit up the coast in some infrastructure-related markets such as Kitimat and whatnot. A number of years ago, I've been in Australia for about 5 years. And my role with Knight Frank Australia in metropolitan Sydney is the transactions for commercial office buildings, circa $50 million, as well as a lot of development stock for commercial, low, medium, high density residential in what we refer to as our emerging markets. I guess what I want to highlight today is a bit about what Australia has and what Sydney in particular has that's given it a point of difference to help the rebound from the COVID experience. As of today, which is Friday, December the 5th, we are technically back out of recession and into positive growth territory. And I think that comes down to a couple of key things. First off, we're an island nation and we have the benefit of being able to close our borders pretty quickly. Being isolated in the past has meant that we have had to have very strict quarantine measures to protect our agribusiness sector. And in this instance, we've been able to sort of look on that track record and drag some of it back to the COVID experience. The political will to stamp this thing out has been significant. And I think that sort of that quarantine DNA of yesteryear that's come through in our politicians. Now that's been broadly across the board. More locally for Sydney and metropolitan Sydney, it's really been investors and speculators have found confidence in a large pipeline of transportation infrastructure projects across metropolitan Sydney and throughout its CBD. So I think if you put all those in the mixing bowl, then that's where we're able to sort of track back into positive territory from a growth perspective. Starting off, the shape of the market here is effectively, we have sort of 5 major cities, but we've got 3 that predominantly huddle the eastern seaboard, not dissimilar to how Canada has major city centers that are close to the US-Canada border. We're all hunkered down on the eastern seaboard, and in Queensland we've got Brisbane, then we have Sydney in the state of New South Wales, and then we've got Melbourne in the state of Victoria. Now out of those, Sydney is very much the international gateway city for Australia, for anything inbound, be it labor, be it capital, be it migration, goods, services, trade, what have you. And that's certainly been helpful, but broader New South Wales as a state has a very diversified economy, which helps Sydney maintain this position. So we've got resource extraction, we have major ports, we've got one of the world's largest coal ports, which is in Newcastle, about 2 hours north of Sydney. We've got production, we have raw resource extraction, we've got distribution, and we have advanced labor and capital markets to help the movement of those inputs throughout the rest of Australia. Now, from a property perspective, one of the things that I've always reflected on that I find interesting is that in Australia, there's a mandatory requirement to put roughly 10% of your annual gross pay into your superannuation or retirement savings plan. So we don't have a choice. Once a fortnight or what have you, there's a large injection of pure cash into the system, and that goes into the superannuation funds, and then they need to get the money out the door. Now, what that means is that domestically, there's a lot of competition for real estate. The superannuation funds, some of them will invest offshore, but it's much easier for them to work onshore and then recycle the capital here. But we also have a significant amount of international capital flows coming into Australia and coming into Sydney. And pre-COVID, part of my role was to make regular visits to Hong Kong and Singapore and Malaysia and do direct extraction of investment and bring it down to Sydney. So we've got typically, we have a very active, high frequency, high velocity type of a marketplace for property. Now, I've always had a bit of a view that Australia and Canada have a lot of similarities, and to me they are still very similar, apart from the COVID experience. We are both raw commodity-based economies. Our dollars tend to track very similarly against the US. We are limited on our domestic secondary and tertiary manufacturing. We've both got a singular large trading partner that can be a bit of a bully at times. I think that sort of more socially as well, both being Commonwealth countries, we've also got a lot of historical similarities in terms of how we've treated local peoples. And so we're sort of following some footsteps from Canada, I think, in terms of how we go about dealing with our First Nations title treaties and whatnot. But as of today, which is, I think I mentioned Friday, December the 5th, Australia has had about 900 deaths related to COVID. And just looking at my notes here, I think Canada is closing in on about 12,500. We have had about 28,000 cases in total, whereas Canada, in and amongst its second wave now, is closing in on 400,000. So I think the fact that we're out of recession today, again, our quarantine process, the political will to stamp it out, get on it early, and shut down the borders has been really well and truly beneficial. Now, my experience during the COVID marketplace was that our inbound international capital was obviously very, very slow. Cash flow came into question in terms of ability to pay and credit covenant, whereas land held up extremely well. And my dealings, and I've been lucky enough to get away roughly sort of call it $180, $200 million in development sites since March. We've been able to maintain more or less the headline number that we are looking for, but we've had to provide more time in other elements of the transaction, particularly around the settlement period and pushing those time periods out. So land is held up well, kind of going back to really basic fundamentals, whereas that cash flow and existing improvements came under a lot of scrutiny. On the land side of things, commercial development really kind of fell away. High density development really fell away as well, as one would expect. In the emerging markets where I operate in metropolitan Sydney, we're working off of new transit-oriented development sites. They tend to be pretty high density. We're talking 200 to 400 apartments. And it's hard to get the pre-sales for those right now, therefore it's hard to get the financing. But our low and medium density pricing has shot up significantly compared to pre-COVID levels. And there's a bit of the exodus from the CBD, but there's also been a lot of stimulus put into new first-time home buyer, build-your-own-home type grants. But I think a lot of that is still about that pipeline of infrastructure-related projects. Now, Sydney has been for a number of years, decades rather, working away from its metropolitan model and working more towards a polycentric system from a planning perspective. And instead of having everyone from the suburbs come and rush their way into town, the Sydney CBD, we now have the Sydney CBD, North Sydney CBD, Chatswood CBD, Parramatta CBD, and then there's a few others that are coming online. What that means is that we've had significant development with respect to new rail corridors, new tunnels for motorways, and probably most significantly, a new 24/7 international airport in Western Sydney, which is about an hour and 15 minutes away currently from the Sydney CBD. Now that airport itself is drawing its own, I guess, synergies with additional transportation investment, increases in investment, such as new rail corridors to connect the airport to the existing rail network, or new motorways to connect to existing motorway networks. And what that's done is it's really given the investor or the speculator an ability to quite comfortably latch on to a thesis that says, well, I've got money and I want to get it into the marketplace. If I can't go and buy an office building, or my investment committee won't let me because they question the tenant covenant, I can snuggle up to the $5 billion that the federal government is spending to get this new federally significant investment up and running and off the ground, pun intended. So that's really, I think, from a Sydney perspective, what has helped to keep investment dollars rolling during the COVID marketplace. And where we all thought that we were going to have a big fallout in pricing and land value, I don't know if that's necessarily a fair comment. Certainly some of the stock has risen in price, whereas others, it's probably not so much an adjustment for pricing, but just the simple matter that no one really wants a 400-unit apartment site right now, so it just wouldn't even trade at this point in time. So I think to wrap it up there, the recovery that we're experiencing right now, in hindsight, has the benefit of the island nation and that border closure ability. Certainly that political will that's sort of steeped in successful track record in dealing with quarantine issues, but investment into transportation infrastructure with a pipeline that probably spans the next 20 or 30 or 40 years in some cases really has been our saving grace. Very happy to unpack any more of that in more detail with any of my colleagues back home if they want to get on the phone or have a chat, do a FaceTime, all good. And again, thanks very much for the time. Brenda, congratulations on another successful event. Wishing everyone a very Merry Christmas and Happy New Year. You guys certainly deserve the break.
We thank you for attending this annual RI presidential event. We appreciate your support through the year, and we are pleased you can join us today, albeit in a different format. Once again, I welcome you and thank you for attending this exciting event. I do hope you enjoy your sweet treat. And let's all together, let's be kind, be calm, and be safe.